'cause I'ma come up. Yeah, I'ma be real soon. Yeah.
Alright boys, it's time for another one. Alright, so this video is going to be, we're going to be looking in at indicators. There's about 6-ish indicators we're going to be using. So let's begin. Once again, the lines I have drawn on this chart are just round numbers where the stock is bounced. This is sprint, as we can see right here. I already have a line drawn at 8. Let's just extend this baby over here. Like I said, this is the play I'm currently in, anticipating for the break off of 8. I got in a little late, not gonna lie, at 8:15 just because I added throughout the day. I'm still 6 cents up regardless, so I have a little bit of nice wiggle room for tomorrow, and hopefully we can either we can hit at least 850. I mean, I'd be happy taking profits anywhere over 830, but target goal is 850, and then also Sprint is looking to be bought out by T-Mobile. I don't know if any of y'all are aware of that right now, but there are rumors that T-Mobile could potentially buy out Sprint, and if that happens, there's going to be a pretty big run up, and there's going to be a huge explosion on this stock right here. So let's get into things. Oh, and also that's just another reason that I'm trying to get this started early, just because this shit could blow up any minute now. I'm not saying it's gonna blow up. I mean, I don't, no one knows when the deal's gonna happen, but still, this is something that you want to get in on. There's also another couple other companies I have on my watch list I've been watching for a while that are buyout candidates that we will be watching. One is a penny stock, which we will try to stay away from, but they met with a financial advisor about 2 or 3 weeks ago, I believe, can't remember, to start discussing the sale of the company. Companies like Amazon, Google are interested. I wouldn't be surprised if any mobile carriers were interested, just because it is a satellite company. But yeah, alright, that's enough of that. Let's get into the lesson. I understand some of these lessons are probably long, but there's a lot of information that needs to be covered. So let's go ahead and like I said, I don't know if I've said before, this is TD Ameritrade. This is the Thinkorswim platform. They have 2 platforms, Thinkorswim or I think it's called Architrader, something like that. Most traders use this one just because it has the most doohickeys and bells and whistles and stuff. I also have, I'm starting to think that there's no way of y'all to get charts like this, at least on your app. I was looking on my phone today and I couldn't find anything. I'll keep looking, but I couldn't find any candlestick charts that were free. But I'm going to keep looking, and I'll find something for y'all to give you guys something to look at. So, alright, so what we're going to do to look at indicators, what you do is you come to studies. I already have my indicator set up. Here's my SMA one that we just went over. And then I have one called swing and one called Bullenger Bands. We'll just start with the swing, just because I'd say for the most part, this is the type of indicators I use the most. Starting from top to bottom in relativity that I use to them. Alright, so first we're going to have the RSI. I will get you guys an official definition of what the RSI is. Alright, so the Relative Strength Index is a momentum indicator developed by noted technical analysis Wells Wilder, the company that compares the magnitude of recent gains and losses over a specific time period to measure speed and change of price movements of a security. Alright, so that was a lot there. Basically what it is it tells you if the stock is being overbought or oversold. So here, you can see this white line here on top and on bottom. These white lines are usually at 70 and 25. For some reason, mine are adjusted weird. I need to fix that, honestly. But pretty much it just tells you whether the stock is overbought or oversold. So for you to understand this, let's take a look at the indicator with the graph. Alright, so here's a good example over here on the left side. We can see, you see this massive, spike in price where you get a 36%, you know, increase in 2 days right here, 36%. So, that means a lot of people are buying the stock. So you look here, and, you see the buys here, right? You can see them, because when a stock price goes up, typically it means people are buying shares of the stock, driving the demand up. And then, we'll look at a sell-off. Here's a good one on the right side. We can see, we're up here at $9, and then in one day we lose 15%. And you see the RSI turn from 68 to 31. Now, typically the 75 and the 25 are at 70 and 30. So as you can see, the play here would have been, you see the RSI starting to get oversold, Now this sell-off happened because of earnings. It wasn't a chart play at all. This is why we will never play earnings. You just see, I mean, here, you got a good earnings here and got you a 36% rise. But, if we look at every other earnings that Sprint and most companies report, they are all down. I have not met one stock investor who has said to hold earnings. Earnings are more of a day traders play where, they wait for the morning after to either buy or sell or short sell the stock depending on what the news was. But yeah, so this has nothing to do with being a chart play at all. Typically, this would be considered, I'd consider not a breakout, but a strong uptrend. And I feel like if this earnings hadn't happened here, we would have continued going up, but obviously that's not the case. And that's why you see this massive random sell-off. All the indicators were looking good. They're all rising. Everything indicated a breakout except for that. So the RSI basically is just an indicator that tells you if the stock is being overbought and oversold. Very helpful. Leads to a lot of dip buying opportunities that you can catch on stocks like right here. It's not really the best example of one, but the stock doesn't. I mean, here's kind of a good dip buy. I'd prefer it to come down to 30 than 40, but you can see the doji candlestick right here, indicating the momentum change. So that's something that, we got to pay attention to because, this right here is an easy 15% gain in about 5 days-ish, somewhere around there. So that's just an easy gain that you can take advantage of. So that's the RSI. Let's get a MACD definition. MACD. Alright. Says the MACD, moving average convergence divergence, is a trend following momentum indicator that follows the relationship between the two moving averages of price. The MACD is calculated by subtracting the 26-day exponential moving average, or EMA, from the 12-day EMA. EMA is estimated moving average, while SMA is simple moving average. I prefer to use SMA over EMA. Just more people use SMA, but there is also EMA, so that's estimated moving average. But basically, do I really understand how to do this math? Or, I mean, I understand how to do the math, but do I want to do the math or do I really care about that? No. All that matters, honestly, is, when shit's green, it's fucking good. When shit is red, obviously it's not good. These are all just things that help us indicate whether the stock is going up or down. So, you can see, let's look let's look at something else let's look at a penny stock. Alright, here's, I guess, should we use this one? I guess so. This, it tells a pretty good story here. So, you see, price is pretty flatlined right here around, probably 90 to 70. It's not really in an uptrend. But, here's where we're looking at, you see, the green bar is starting to get bigger, and you see a uptrend start here. This is actually where the bars go from dark green to light green, right here on this bullish candlestick right here. And then, you see the slight increase, and then we get here, and you see the green bars start to get bigger, and you see the price start to go up, and you see the bars start to get bigger, and you see the price start to go up, and then you come all the way up here to the final green, light green bar, and you see this bearish candlestick right here. That's when it's time to sell. And then we can see a recede of the green line into red as we start a downtrend from here to here. And then we get to here, and we can see this. You see the little doji right here. This is a neutral doji. It's the white doji that I was talking about. And you can see, the final big red, bright red bar, followed by two bullish candlesticks and dark red sticks down here that also start to recede. And we see, we get this recede all the way back to even. We get this price push from 33% in 7 days. Also, mind you, this is a penny stock, so it is very volatile. So that's why this is such a massive gain right here, even though it probably doesn't look like it. But all throughout the stock, you can just see, how this really correlates with this. And, you put these together right here, and it just helps you read the stock a lot easier. It tells you a lot more information about it, So these two are my favorite indicators and the ones I use the most. Next one we'll look at is the stochastic oscillator. The stochastic oscillator, here's the definition, is a momentum indicator used in technical analysis of stocks, introduced by George Lane in the 50s to compare the closing price of a commodity to its price range over a given time span. So basically, it just measures the momentum of the stock. All these, they correlate to each other, but they all have slightly different meanings. But, you can see when this is up, when the stochastic is up, the MACD is up, the RSI is up, the CCI is up, they all correlate to each other really well. It's just the more you kind of have, the more precise you can be, because if you see, the RSI being oversold, and then, maybe the MACD is looking up, and then, you get multiple sell signals, crossing of the 80 of the stochastic, crossing of the 70 by the RSI, followed by sell-off. They help paint the story, and they help you understand what's going to happen next. And just using more of them, you tried using more so you can get, a microscopic, view of the stock, So if you see something start to go wrong on the stochastic, that could indicate that, the MACD could also start to curl, or the RSI could start to curl, things of that nature. So, it's just telling you the momentum and where the stock's kind of headed. Obviously, you always want it to be up. You always want this kind of purple line, I guess, to be below the salmon-ish looking line, and things like that. Moving on to the next one, we got the CCI. Here's the definition for CCI. Lambert originally developed CCI to identify cyclical turns in commodities, but the indicator can be successfully applied to indices, ETFs, stocks, and other securities. In general, CCI measures the current price level related to an average price level over a given period of time. So, okay, obviously there's just a lot of bullshit, and I only had to read the last fucking sentence of that, but measures the current price level related to an average price level over a given period of time. So pretty much, it averages the price and compares it to the current one. Just really ties into all the other ones. You can see when this is a measurement of price compared to all these being momentum and like oversold and overbought, like buying of the stock, where this one is related to the price. So you can see where these ginormous spikes are, like this one right here in the middle. There's the price of the stock in the past was nowhere near what it's at that point, so that's why this is so high. We want to find stocks that make really high spikes. I mean, given typically this is only going to happen on a penny stock, I don't think we'll ever see 454 or 450, that is. Let's see what kind of gain this was. Yeah, we'll never see a 180% gain, so we'll never see any spikes like this, but just these spikes that come up and hit the 100 mark, things around there. If we were to ever see over 200, I'd probably be surprised. So this shows you where the price is going of the stock. So obviously the higher this thing climbs, the higher the price is. Let's see. Let's look at non-penny stock. We shouldn't be looking at penny stocks. They just really help show easily, so that's why I pulled one up. We'll just look at BlackBerry again. So you can see, we got a spike here to 345. Let's see what kind of gain it made. 15%. All right. I mean, it made a 15% gain, but I mean, you can see the price was pretty stagnant for a while and wasn't doing much. Went from a low of 623 to it looks like a high of $8. So that's why this explosion is so big, just because how long the price was stagnant at a low number, and then just any gain it saw a pop. But again, this is like a kind of a more lagging indicator. Like I feel like this one, it's only going to correlate with the stock price, so it's kind of just obvious. The stock's going up, this is going to go up. But it doesn't. It just shows you more momentum again, and like a more of a confirmation indicator than like a momentum and like a something to like see if the stock's about to blow up or not. When the stock's blowing up, this is going to be blowing up. And I don't know. I don't really see setups through this. I just see confirmation through this. Alright, so that's a brief introduction to those. Again, everyone should also probably go watch additional videos just to cement the learning and to learn more. I'm not an expert. I'm just giving y'all the basics and what I have kind of liked throughout the years, so if you decide to, go off on your own trading and do your own thing, you guys, if you don't like what I'm using, or you find something better that you might like, it'll just benefit you. But obviously if you don't care and you're not gonna invest by yourself and you're just doing this and you just need to understand what's going on with my screen and what I'm looking at, then it will be good. Alright, so these right here are Bollinger Bands. Let's pull up the definition, Bollinger Bands. Alright, so definition developed by John Bullinger, never would have guessed. Bollinger Bands, it's copyrighted, are volatility bands placed above and below a moving average. Volatility is based on the standard deviation, which changes as volatility increases and decreases. The bands automatically widen when volatility increases and narrow when volatility decreases. Alright, so what does that mean? Let's take a look. So, volatility obviously is how much the stock is moving. So, you know, right here on the right side of the graph, this is considered very volatile because you see the price go from $7.04 to $11.15. Let's see how long this takes. You saw a 71% return in 74 days. Oh yeah, that includes weekends. So a 71% return in 74 days is that's a very good profit, you know. And let's see what the stock, and then in the rest of the year, okay, whatever. In the rest of the year, the stock only moved 31%. So for, I don't know, what is this? All right, so this is about 3 months over here. So for the other 9 months, the stock only moved 31% up or down as compared to here, you know, where it made what was it, 70? Yeah, it was like a 70% gain. So, you know, 30% over 9 months compared to 70% over 3. You know, just, and then you can just see it. You know, you see all the volatility. So like you can see we have it's when the bands explode like this, it's called they're popping. You know, you can see the bands expand as a price movement is made, a pretty large price movement. When a large price movement happens, the bands are going to expand a little. And then, you know, you start to see volatility drop off around here, and you see the bands start to contract again. And pretty much what these things do is you look for these tight squeezes right here. You know, you see how the bands kind of squeeze together and then they pop. You'll see them get tight again here, and then, you know, some decent price action happens here, some price movement. Not a lot, but, you know, you see them expand, and then you see them contract again really quick, and then another pop, and then, you know, you have this gain right here, and you have another large expansion, and then you have the bands contract again, and they pop again. So on this, you know, I'd say there could be another pop once these start to contract again enough. This is the 1 year time frame, so this is not what we'd be looking at. We'd be looking at, I like to look at more of a half year, just look for swing trades, but I guess the main one I'd probably look at is probably a month. So let's just take a look at, and also these bands can act as resistance and support levels. Typically the bottom is obviously support, the middle is kind of a breakthrough, and then your top Bollinger Band is going to be your resistance, and we can see through the stock, I wonder if there's a highlighter on here. That'd be dope. Oh, what we got? Text note. Andrew's pitchfork. Alright, I guess we don't have a fucking highlighter. Why would they put one of those on here? All right, but we can see here, you see the stock kind of start to come down a little, and you see it, touching the bottom Bollinger Band, and then you have it kind of pull off the Bollinger Band, and then it crosses the Bollinger Band, and then you see it when it crosses, it explodes up, hits the top Bollinger Band, kind of stays up there a little bit, and then so this is kind of a small breakout. This is a 3-day breakout here. And then the breakout stops with this doji right here. There's another good candlestick that we are going to be looking for a lot. You see the doji candlestick happen, and then you see the price start to fall again. Staying in between the top Bollinger Band and the middle Bollinger Band is definitely what you want. You see the price action come down, hit the middle Bollinger Band, but you see it pop right back up. We see another breakthrough of the top Bollinger Band, uptrends for 2 days, recedes back down, hits the middle Bollinger Band, kind of stays with the middle Bollinger Band. You see this huge sell-off here, followed by, it recovers at and also hits support again on the lower Bollinger Band. So, I don't know if I'm getting repetitive right now, but and then you see right here just the stock ride the top Bollinger Band for a nice 8% gain over 6 hours. So this is one full day. This, for example, is what we're going to be looking for when we're looking at plays and what type of profit we're looking for. Honestly, it'd probably be hard to hold all the way to the top. Unless, well, let's see what the price went from. Yeah, it's kind of at random prices at in this point in time. So it would have been hard to capture the full entire profits, I feel. But, we can definitely capture up to 6% here and that's just in one day. So, think if we capture, I'm not saying that, every day we're going to capture these because, these don't just happen, or it's not just as easy as, find them, every day and then, they rip every day. Sometimes you gotta wait a little bit. I've had stocks that, I looked at initially, they didn't blow up, but I looked at them a week later and I've seen some that have made 30% gains, some, that have made 10% gains, 5% gains. So, sometimes you gotta wait a little bit, and sometimes you can buy in too early, and you can either just be stuck in consolidation for a while, or you could see a little downtrend. So, sometimes you gotta be patient, but these profits are, easily available to get, and if we hit 2 of these in a week, that's 16% a week. That's a pretty good profit for a week, and if we capture that, we can start to grow the account fast. But I'm gonna need everyone's help. Everyone's gonna need to learn this, understand this. So when I see it, I call it. As we go, you'll obviously learn more just because you'll be seeing the trades. I'll be explaining them to you. I'll be explaining them to you first, what I anticipate, and then, you can see what actually happens, and then hopefully y'all will start to catch on. Hopefully, y'all will start to be able to, find stocks and contribute to, this process, or just, double check me or something, because, this is y'all's money too, so, I'm gonna need a little bit of help from y'all too, later on in the future. So, I hope all these videos that I'm making are helping y'all learn. Like I said, for sure, seek outside help via YouTube. That's pretty much where I learn most of my stuff. There's some good stuff on some websites. I also encourage everyone to download some type of stock tracker. Yahoo Finance is a good one, I feel. It's just an easy way to track the stocks. I can't talk. And yeah, I'd say that's all I got for indicators. Actually, I mean, I didn't talk. Well, yeah, I always keep the RSI up, just for every reading. Uh, Momentum SMA, pretty much, it averages the SMAs and shows you where they're going. It's pretty late. It's been a long day. Let's say that's gonna have to be it for this one. So 30 minutes. Hopefully we all learned a lot, and hopefully they keep getting shorter. All right, guys.